In this video, we'll look into the second problem of the June 2017 CS Executive Company Accounts and Auditing paper. Let's look at the problem first. ABC Limited had rupees 10 lakhs, 6% debentures of rupees 100 each as on 31st March 2015. The company purchased in the open market following debentures for immediate cancellation. On 1/7/2015, it purchased 1000 debentures at 97 on a cum interest basis. On 29th February 2016, it purchased 1800 debentures at 99 rupees on an ex interest basis. They have also provided us the interest dates. In this case, it is 30th September and 31st March. That is, they are providing half year interest to the debenture holders. Now we are required to provide journal entries in the books of company for the year ended 31st March 2016. So now we can make out that there are two types of cancellations. One which involves cum interest basis, the other one is ex interest basis. In case of ex interest, the amount paid towards debenture does not include the interest portion. In this case, the company is purchasing debentures from the open market. Now we can purchase debentures from the open market in two different ways. One is the ex interest type and the other one is cum interest basis. If the company purchases debentures on an ex interest basis, the amount which they pay to the debenture holders will not include the interest portion. Whereas if the company purchases debentures from the debenture holders on a cum interest basis, then the amount which they pay to the debenture holders will also include the interest which is due to the debenture holders. Now let us calculate the actual amount paid. In case of 1000 debentures that is purchased on 1/7/2015 for immediate cancellation at 97 rupees on a cum interest basis, the company has actually paid not 97,000 but 97,000 minus the interest for the expired period. In this case, the expired period comes to 3 months. That is from 1/4/2015 to 1/7/2015. So it would have paid interest on 31st March, but now they are cancelling the debentures. That is, they are purchasing the debentures on 1/7. That is, we have to calculate the interest for the expired period. In this case, the expired period amounts to April, May and June. That is 3 months. So if you calculate interest on those 1000 debentures at the rate of 6%, that is the debenture interest rate, for 3 months it comes to 1500. Now this 1500 is already part of the 97,000 rupees which the company is paying to those debenture holders. Therefore, actual amount paid towards the purchase of debentures would only be 95,500. That is 97,000 minus the interest for the expired period. Now let us come to the other purchase, that is 1800 debentures purchased on 29th February 2016 at rupees 99. But in this case, it's ex interest basis. That is, this 99 does not include the interest portion. Therefore, amount actually paid towards debenture is 99 itself. But how much is the amount paid towards interest, that we have to calculate. What is the expired period? First of all, the last interest date payment was 30th September in this case. Now it is 29th September. Therefore, how many months have passed from 30th September? October, November, December, Jan and Feb. That is 5 months have elapsed since the last day of payment of interest. Therefore, we have to calculate interest for 1800 debentures at the rate of 100 at 6% for 5 months, which comes to 4500. Now the total amount paid to debenture holders in this case would be ex interest price of 1,78,200, which is nothing but 1,800 into 99, plus the interest which we have to pay of 4,500. Both put together, it would be 1,82,700. Now let us come to the journal entries part, because that is what is asked in the question. When did we first purchase the debentures? We purchased it on 1st July 2015. How much did we pay in total? It is said it is purchased on a cum interest basis. Therefore, we are paying 97 in total. But that 97 also includes what? Interest portion, which we have already calculated. Interest portion comes to 1500 out of that 97,000. If interest portion is 1500, then the remaining amount would be amount paid towards own debentures. That will be like an asset. Investment in our own debentures will be treated as an asset. We have to debit increase in asset, that is own debentures account, debit 95,500 because the amount actually paid towards debentures is only that much. Then the expenditure part. What is the expenditure for the expired period? Expired period in that case was 3 months, April, May and June. Therefore, the interest on that expired period came to 1500. And lastly, the amount paid to the debenture holders, which is credited to bank account, 97,000. Next, we have cancelled the debentures. Therefore, we will debit 6% debentures, decrease in liability, and decrease in asset should be credited. Therefore, we will credit own debentures account, 95,500. So the difference in this case is 4,500. That is nothing but the profit on cancellation of debentures. We cancelled 1 lakh worth of liability and cancelled 95,500 worth of asset. Therefore, the 4,500 rupees is nothing but capital profit, which will be transferred to capital reserve account. Next comes the half yearly interest, which should be provided on 30th September. So half yearly interest means interest is an expenditure. Therefore, for the first half, we have to provide for interest. So as on 30th September, we only have 9,000 debentures instead of the opening balance of 10,000 because we recently cancelled our own debentures to the extent of 1,000. Therefore, provide interest for 9,000 debentures at the rate of rupees 100 each at 6% for 6 months. When we do so, we will get 27,000. So therefore, interest on debentures account debit to bank because we have to make the payment to debenture holders. Next, on 29th February, we once again cancelled our own debentures to the extent of 1,800 debentures. In this case, the cancellation is of ex-interest type. That means whatever we are paying does not include the interest portion. That has to be paid extra. If you remember our calculation, therein we had mentioned that 1,800 into 99, that is 1,78,200, does not include interest. Therefore, we have to pay interest apart from this, which is nothing but 4,500. 1,800 debentures into 100 rupees into 6% for expired period of 5 months, which came to 4,500. Both put together, now we are paying 1,78,200 plus 4,500, 182,700. Next. Once we purchased our debentures, the next thing is cancellation of those debentures. So cancellation of liability means decrease in liability. Therefore, it has to be debited 1,80,000. Then decrease in asset, that is own debentures account, should be credited. Therefore, 1,78,200 is credited. And the difference in this case is 1,800, which is nothing but capital profit, which is sent to capital reserve account. Next comes the half year interest on 31st March 2016. Once again, we have to provide interest. So interest is an expenditure, therefore debit interest on debentures account and credit bank account since that interest has to be paid. Now we have to provide interest only for 10,000, that is the opening balance, minus 1,000, that is the first cancellation of debentures, and minus 1,800, that is the recent cancellation of debentures. So now we are left only with 7,200 debentures. On that 7,200 debentures at the rate of 100 rupees, we have to provide interest at 6% for 6 months, which comes to 21,600. So we make the payment, so therefore credit bank account. So now what we have to do is, since interest on debentures is a revenue account, that revenue account has to be transferred to profit and loss account. We should simply look at those journal entries where interest on debentures is debited. If we observe that the interest is debited 4 times, first is 1,500, then 27,000, 4,500, and lastly 21,600. All put together, it comes to 54,600. That is the total interest paid during the year for first half as well as the second half. So that amount will now be transferred to profit and loss account. So P&L account shall be debited and interest on debentures shall be credited. If you have any doubts regarding this debenture problem, please leave a comment below. We will try to answer your question. And please do subscribe to our channel Excel Academy for continuous updates.